Hey everybody, welcome to Chapman True, and this is a channel where we talk about a lot of the real estate things for people just getting started like we were just a couple of years ago. And today we're going to go ahead and talk about how to find and analyze properties, especially for your first deal. So you're looking and you're trying to figure out what's going to be my first property. What am I going to do? Which property I'm going to pick? We're going to go ahead and talk about that a little bit. So let's go ahead and talk about how to find and analyze your first deal, how to find and analyze your first property. There are some steps, I guess, that go to this.
Yeah.
Yeah, yeah. And you were a bit ahead of me on the curve when it came to real estate. That was your jam.
Yep.
That was,
My gym.
yep. I just got into it when we moved back here to Charleston.
Yep.
And we moved here in 2020, and that was the direction that we were going. We ran a bar in Costa Rica and did all those things. And real estate was our next thing that we were going to do. I had to figure out how to do this thing because that's what we were doing now, right?
Right.
So we're going to talk about that a little bit and some of the steps that it took in order to learn how to analyze a deal and study the market and all these kind of things. So let's go ahead and let's talk about that a little bit.
Yeah. So the first step is you want to define where you want to invest. And I see this with a lot of new investors and sometimes even experienced investors where you get the shiny object syndrome and you're trying to figure out, do you want to invest in this area or that area, or do we want to be in North Carolina or South Carolina or Pennsylvania? Do we want to do it from a distance? Do we want to do it? So there's a lot of things to define, but also whatever market that you're choosing, you need to understand what kind of properties you want to renovate. Do you want to renovate mobile homes? Do you want to, like downtown Charleston, we've got gorgeous homes downtown that need to be renovated, but they also come with a completely different set of rules and guidelines from the city. So do you want to do something like that? Do you want to be in the lower end flips where maybe you just go in and put low end fixtures and features in there and get it back to market in maybe an area that's not so great, but the price point's really good? Do you want to be high end? Do you want to go and do the $1 million homes? And then also targeting down to what area you want to be in.
Yeah, and when you're just getting into it, especially, I don't know, I'm of the thought process, I'll practice something over and over until I really just get it down and I move in baby steps from there. Other people like yourself, you want to dive in and just do the whole thing and just figure it out, like guts and all. So it really depends on what kind of person you are, but at the same time, from a risk factor, you're going to want to, I would imagine, do a property that has the least amount of risk as you're practicing if you don't know so much about real estate up to that point. If you don't have a Rolodex of contractors, if you have no idea what supplies cost, things like that, then you're going to want to go with something that's a little more low risk, which would be, I would imagine, like a lower end flip, correct?
Yeah, and so I think that just really depends on you and your market. So you really want to dive into what's selling in your market, because maybe you feel like something's less risky because it's at a lower price point, but maybe nobody's buying in that area. In my opinion, that's a higher risk. It doesn't mean that a lower priced property isn't selling fast and isn't in a good area. It's just really, truly market dependent. You need to assess your own risks and also your own skills. Because maybe if you come from like a high-end design background and a high-end family or something where you're used to having like luxurious things and that's your comfort zone, then maybe those multi-million dollar properties make more sense to you, because for you, you really understand what those people want and you can dig in and do that. It just depends on your experience. But I think as a generalization, typically people like to start in those lower level flips, lower barrier to entry. And I think that's great. And it's also completely fine to try out a few different styles as you're trying to figure it out. You don't have to marry it.
Yeah, but at the same time, if you only have like $30,000 in your pocket,
Then that's what you go with.
right, well, that's what you
You
go
work with
with.
your
But
budget.
most people just starting off, some people will have a nice little bankroll that they can fall back on, but most people starting off are going to have a very limited funds, if any at all. So that kind of limits where you can even get started. But I mean, that all goes back to knowing your market, right? And
Knowing your market and also who you are and what you have and what you have going on. It is very true. A lot of investors just starting out, they have very little capital to start with a lot of times. And so starting in areas where you're going to feel the most comfortable, I think is really important when you're looking for stuff. Yeah.
I can dig that. I can dig that. So after you've learned your market and you understand your area that you're looking into, whether it's your home area or another area, what would be, I guess, the next step in finding your very first property or finding something that's going to work for you?
Yeah, so there's tons and tons of different ways that you can find this. But one of the best ways is to start going to your local real estate networking group. You're not only going to get access to deals that people have, but you will also start to make connections, and maybe you'll get names of contractors or just make friends with people who have interests similar to yours. So that's one way, is to going to meetups and finding that. But then also just hopping on Redfin and Zillow. We did that a lot in the beginning, right? We just were on there every day, looking through, analyzing different properties in different areas to try to see if we could find something on market.
Yeah, when you're looking for something, especially if you're looking for something free, because a lot of times when you're just getting started on things like real estate, there's a lot of different things out there. You can buy this, you can buy that in order to find these deals for you, and this and that and this and that. But one of the things that really helped me was being able to dive into something like a Redfin or a Zillow, where I literally could just jump on there in my spare time. I could look at different properties and look at the map and see all the different details, and start scrolling through and seeing the square footage, see how long it's had on the market, to see what's selling in that area, what they call comps for that kind of thing. So having those free tools was a good way of, for me, starting to find different properties, and going back to knowing your market and analyzing, that was also a tool that I used for
You know what that's really good for too, is creeping on properties. So if you see a property that looks like it's distressed, you offended by the word creep? Oh no, you just had a look on your face like, yeah. So you can creep on properties. For example,
Yeah. So what does that mean? That's why I made that face.
Like-
I realized as I made that face
Yeah.
again, what does that mean?
you
Creeping on
make
the
a lot of
property.
dumb faces.
Yeah.
You exactly hear that stalking neighbor looking at something that hits the market, and you're like, oh, I think that this could be a good deal. Maybe you're not ready and you're just trying to understand. And all of a sudden you see it go contingent, and you're like, oh, somebody bought that. Somebody has it under contract, and then it sells, and then you watch what it sells for. And maybe this is just me as a person. I don't know. But I'll actually keep those on, and this is a long game, right? But like, I'll say, okay, I think it could have sold for this, and this is what I think the rental would have been. It's a property that's most likely going to be renovated. And then it pops back up on the market 6 months later. And then I look, oh, what was that renovation? What did they do?
Yeah, that is a long game, because I can't even remember what I did yesterday. I have no idea. Anyway,
I'm just saying.
That's your thing.
You
right.
could creep.
I get it. I get
Yeah.
it. I understand what you're saying about creep now.
Yeah.
That makes more sense.
Yeah. Just see what's going on, see what other people are doing.
Just hiding in the bushes at midnight on the internet. That's Redfin. Just looking in the windows.
Yeah, I've been doing it for years.
Hmm.
Anyway. Anyway, then the next thing is you can go to an agent, because they have access. Zillow and Redfin, they're going to pull data from the MLS, but sometimes they might miss a couple properties here and there. And so your agent will have the best, most comprehensive list of everything that is hitting the market. And they can actually set up parameters for your neighborhood, the price points that you're looking in, and you can get automatic notifications. So as soon as something hits the market, you can have it directly to your inbox, and then you can start to analyze them. So that's another way to find deals. You can also just drive around the neighborhoods and look for sale by owner signs. You can look for properties that look distressed, and then you can skip trace their number. So you go put the address into skip tracing software, look up the names, and then you could actually call them and see if they want to sell, if that's something that you feel comfortable doing.
Yeah, so you're digging real into that creep zone, huh?
Just go in and
you can skip trace and get the
find them
DNA.
and
DNA.
show up.
Yeah.
peek through the windows,
Yeah,
asking what they're ready to sell. There are companies using AI to pull data and figure out who may be interested in selling sooner than another person based on all this data that they're pulling.
we've got the MLS. We have things like Redfin that comb the MLS, and Zillow and Realtor and all these kind of things. What's another tool that you can use to find that property? What would it be? I know that one that we've used a lot of times is wholesalers.
Yeah. Get on wholesaling lists, join Facebook groups that are specific to real estate investing in your area. And there's always people on there. Hey, I've got this property. Hey, I'm looking for cash buyers. You get on the list and they'll just start sending you emails. So get on as many lists as you can because you'll start to have several properties hitting your inbox every single day. And a lot of the bigger wholesalers, and a wholesaler is somebody who actually goes and gets the property under contract and then they sell that contract to you. A lot of the larger wholesalers, they'll even allow you to define your criteria and then they'll only send you those deals so your box isn't overloaded.
Yeah, and one of the other benefits of going with like wholesalers and people and things like that is a lot of times, which you have to be careful with this, but a lot of times they will analyze the deals for you. They'll go through and they'll say, this is the cost of it. Here's the ARV, which is a term that you should know. And these are the estimated renovation costs. And here are some comps in the area. So if you're brand new, that can be helpful in understanding kind of, but you have to learn to do it a bit better because a lot of times their numbers are really off.
Just going to say, I was like, that's super dangerous.
Yeah, but if you're brand new, it can give you an idea of what at least they're marketing it to you from. And then you can understand, okay, let's dive into this. And you say, wait, I'm not seeing these same comps. I'm not seeing this or that.
So what I've actually started to do, because we're getting a lot of emails right now of properties and we're always seeing stuff come up. What I do is because typically your wholesalers, they are going to be wrong on the ARV in the higher direction, right? In what works better for them to make it look like it's a deal. So if somebody says, hey, I've got a property for $450,000, I'll actually just take that number. I won't even comp it yet. I'll look at that number. I'll run a percentage of the ARV and then just a guesstimate of some repairs to see if we're even like going to be in the ballpark. And that's a really quick way to sift through once you start getting a lot of deals, what's even worth looking at. So if it even looks like you're in the ballpark, then sit down and do your analysis on that.
And there's a couple other ways that you can also find properties and find deals, which is investment groups and auctions and things like that. That has not worked for us so far with the auctions. We've gone to a few auctions and there's a lot of people on a few properties, and that might just be the times that we're living in. But those are ways that in certain areas can work for certain people. So you have to check that out for yourself. And that kind of goes into those meetups and things like that and the online groups where you can ask people, hey, and you can get a feel for where people are finding their properties.
Yeah, we actually found this house that we live in. It's a HUD home. So that's how we ended up getting this property, because it needed work. But because we were going to be the primary owners, they would only let primary owners purchase it first and not investors. So we were able to get in, make our bid, and we essentially won the property because there was holes in the ceilings and no flooring and things like that. And really, the only people that are probably going to take this project on were going to be investor-minded people. So that's a good way to get a primary residence as well.
And things like that, you can take which we did. We took our primary residence, turned this into our primary residence, and rented out our primary as a rental for a while. So there's different ways to figure out how to get in there without it being very straightforward. So that's worked out for us, but there's all kinds of little nuances that you can figure out on your own. Now, after you've studied your market and you figured out what type of property that you're going to do, and you found out where to find these properties, or at least find these properties to analyze, what would be the next step in this process?
Then you need to actually sit down and crunch your numbers and analyze the deal. But you've got to sit down and do what's called comping the properties. You have to find a like property that's renovated of that same property, same general square footage, bedrooms, bathrooms, ideally in the same neighborhood. And you want to look about 6 months back and try to get an idea of what that looks like. And just to summarize real quick, if you're looking at a property that's $100,000 and in that same neighborhood, that in a very identical property, same bedrooms, same bathrooms, same square footage, sold for $250,000 just maybe 2 months ago or 3 months ago, and it's fully renovated, that's your perfect ARV comp. So now you know that when it goes to market, it can sell for that. And so that's just a very brief overview of what you want to do. You can also have your agent, if you are trying to really figure out understanding values in neighborhoods, you can have your agent also run what's called a CMA.
Right. So you're getting the ARV, which is the after repair value of the home. So that gives you an idea of basically what it was sold for and at what level of renovation was
Right.
done. Because if you're going to buy a property and renovate it and try to get that same amount of money for it, then you're most likely going to have to put a similar level of renovation into it. But if you see that it's over 250,000 and it's not even that updated, then you might have found yourself a gold mine that you don't have to throw as much into in order to get a good sale. It keeps property levels at a good price, and somebody can go in there and do the stuff themselves, and everybody's happy. So it depends on a lot of things.
Yeah.
But those things change over time. It's changed a lot since we've even been here and running this whole process. So something to keep up with.
Yeah. So once you understand what the property could resell for and you get a general idea of what you need to do to the property, you can do this all just by sitting at a computer and looking through. If you have pictures, you can get a pretty good idea. You want to start to create your repair budget. This is going to vary market to market. So if you're not sure what that looks like, get with contractors, talk to other investors just to get an idea of what certain things cost. Does it need flooring and paint and lighting and a new kitchen and new bathrooms, and start to put a budget together of what you think it's going to cost to renovate, because that's a really important number to know. And then always make sure you put in what's called a contingency, which is basically just a percentage or a flat dollar amount of exactly what it sounds like, contingent, in case something goes on with the properties. And I was just talking about this the other night. We've ate up our contingency budget on almost every single project. Even if the renovation got done, then we go to sell it and the seller asks for concessions. And I'm like, dang it. It always seems to work its way out. So make sure that you're factoring in that padding and you have that there. And then the other part of analyzing is how you're funding it. So you need to make sure that you get all your line items in there. So you've got how much you can sell the property for, how much you're looking to buy it for. You have your lending costs, your rehab costs, and then any holding costs you're going to have, like taxes and insurance.
And these are some of the numbers that your lenders are going to want to know that you understand.
Yeah.
They want to know that you have a scope of work for the property, that after you talk to the lender, you're going to understand how much it's going to cost for that lender, whether it's hard money, private money, or if you have cash, then you can find out different areas that you can save, but you have to factor all these kind of things in. And that gets, for somebody brand new, that can seem very kind of daunting.
Yeah.
It can seem like a lot to figure out, but there are tools out there. And for example, we do have videos about how to do a home inspection and do a detailed scope of work, and some of the hidden costs that come with lending and hard money lenders and all the different things like that. Those are the kind of things that you're going to take a little time on YouTube or reading articles or whatever and understand some of these costs. But if you can get a really good review and then put a lot of cushioning in there and either run it past a couple people as well, say, hey, I think I have this deal. I'm at this REI. I think I've got this deal and these are the numbers that I've come up with. Do you think that looks okay to you? And most people are going to be like, yeah, I'll look over that for you. Like, most people aren't going to just be like, no, figure it out, kid. So just understanding that and running it past people, and you'll be able to understand if it's something that might be viable for you.
Yeah, you can also partner with people. So if you come with what you believe is a deal and you go to some more experienced investors and you say, hey, I think I've got this deal here. What do you think? And if you have it under contract, make sure you trust these people, obviously. But go to them and say, hey, will you partner with me? Like, I found this deal. I have it under contract. Let's go in 50-50 or whatever your split, you think a fair split is, and have them help you through that process. And it's a great way to get started. It's
Right.
like a crash course into just understanding everything. And that person who's experienced
Mhm.
is going to tell you if that's a deal or not. Same thing with your hard money lender.
Because we've had that happen at least a couple times where somebody has approached us saying that, hey, I think I have this deal. I want to JV this with you
Yeah.
guys. And if we're going to put our money and time and name onto something, then we're going to want to make sure it's a good deal.
Exactly.
So we looked over and we're like, hey, like it could work if this happened, or it doesn't work because of this or this. So that's a good idea. If you can do some networking and find some people that are looking for some new deals, and you bring in one that you think is a deal, then maybe they can help you out. So
If you're in good old Chucktown, hit us up. Let us know if you've got something where you're looking at it and you're like, hey, I think that this is a really good deal. Hit us up, because we are open to partnerships and teaching and growing with people. So
So now we've gone through and really understood the market and figured out where to find the properties and learn how to crunch the numbers. Then it's time to get out of that analysis paralysis stage, right? So it's go time. And that's probably where a lot of you guys are right now. I would imagine, listening to this, because we've been doing it for a couple of years now here. I imagine that the gurus are not listening to us trying to figure out how to get their first property, right? So if you're listening to us and you're probably at the stage where you're like, okay, it's time to go ahead. I think I can do it. What's the next step?
Yeah, so here's a good tip, and this is something that we still do, is I run our best, better, and worst case scenarios. And so if you're looking at your worst case scenario and say you may only make $10,000 on a profit when you really set your sights on 30, but you know that if it doesn't sell for quite as much as you want, or the renovation goes over even higher than your contingency by $10,000, and put in some worst case scenarios in there, and you're still making money. But when you're looking at it and you say, I think that these are really firm numbers and this gives me the profit that I want, I think that's a really safe way to move forward with a property. So just make sure you know your worst case scenario. If you are trying to make a deal work, for example, if you're thinking, oh, okay, the roof does look a little bit rough, but hopefully it doesn't need that, and you don't write that into your numbers, and you only write in a $20,000 profit, you could be in a pretty tricky situation in that scenario. But if you've accounted for everything that you can see would be wrong with the property and have been really conservative with that, and you're still making money, I say just jump in and do it, because that's really the only way that you're going to know and learn and gain confidence, is by actually doing it.
Yeah, exactly. Your first time doing anything there's a learning curve to almost everything in life. Just expect that you're going to go in there and you're going to learn. Hopefully you're going to make a nice buck doing it. But if you don't, you've done all the things you can in order to keep yourself safe in that scenario and not lose a lot. But think about all that you're going to gain in the knowledge and the experience that you're going to have on your very first property.
Yeah.
So go into it like that. I think that's a good way to do it. And that's the way we did our very first one. We said, obviously, we never want to lose money on a project, but we said, if we can break even on this and we can learn as much as possible on this project, then people pay tens of thousands of dollars to go to school and to take courses and do all these things in order to learn certain things. And for us, if we could break even on something or make a little money while learning, it was a win situation for us. So that's the way I think is a good way to look at it when you're going into your very first property too, is you're not going to get rich off of that first property. Maybe you will, but look at it like you're not going to get rich. You're going to go in there and you're going to learn as much as you can so that the next one goes a lot smoother than the next one, And then a lot of times after that, you'll find your niche also. Niche, whatever you want to call it. You say, okay, that's not for me, or this is for me, or whatever. And you'll branch off from there. So the whole kind of gist of this final step is just to actually take that final step and go ahead and try to figure it out.
Yeah, just get out there, get some deals, analyze, figure out your neighborhoods, and make it happen.
Yeah, so thank you guys very much for hanging out. This is where we are doing a more long form conversation with you guys, where it's not just boom, here's what it is, let's get it done as fast as possible. We want to actually have a conversation and kind of a podcast format where we're talking about how it actually, the things that we know about this, and not just breezing through it just to get through it. Let us know if you like this form, if it's something that you get into, or you rather just get it done in a short, which is 60 seconds, and get all the information you can and keep on moving. Let us know if you like this in the comments, but make sure to hang out with us on the next one. And we're probably going to do a shorter form version of this and see which one you guys like best. So check us out. But thank you guys very much again for hanging out and talking about finding and analyzing your first property. So make sure to like, subscribe, share, do all those things that you do on YouTube. And we'll see you guys next time on Chapman True.